You're invested in Apple or whatever other company that you fancy, and you're looking to understand more of what is going on in the company. You maybe even want a breakdown of sales, earnings, and future plans so you know if your investment is good or bad. Where do you go looking? There is a place, or rather an event, that you can look to find your answers. And if you stick around till the end, I'll tell you of a nice free tool that you can use to help you in that regard. Welcome to The Eighth Wonder, a channel dedicated to making compound interest your best interest. So what is this not-so-secret way of getting up to date with business performances? The answer is something called an earnings call. It is a teleconference or webcast held by a publicly traded company to communicate its financial results and discuss its performance with shareholders, analysts, and the broader financial community. These calls typically take place shortly after the release of a company's quarterly or annual financial reports. Earnings calls provide a formal platform for companies to disclose their financial performance for a specific period, such as a quarter or a year. This includes information about revenue, profit, expenses, and other financial metrics, as a primary means of transparency for publicly traded companies, ensuring that shareholders and stakeholders have access to timely and accurate financial data. They also provide an opportunity for company executives, often including the CEO or the CFO and other senior managers, to discuss results and provide insights into the factors that influence the financial performance. They can explain successes and challenges as well as their strategies for the future. This communication helps investors and analysts better understand the company's direction and prospects. In the case of Apple, for example, it would be the likes of Tim Cook, the CEO, and/or Luca Maestri, the CFO, who would be the ones to provide these kinds of insights. The call typically includes a question and answer session where analysts, investors, and sometimes journalists can ask questions directly to company management. This interaction allows for clarification, deeper insights, and more comprehensive understanding of the company's financial situation and business strategy. Earnings calls can significantly impact the company's stock price. Positive results and favorable outlooks often lead to an increase in the company's stock value, while negative results or uncertain guidance can lead to a decline. As such, earnings calls are closely watched by traders and investors, and they can trigger stock market volatility. They also provide an opportunity for companies to compare their actual financial results with analyst expectations. If a company outperforms or underperforms these estimates, it can influence market sentiment and affect the stock's performance. Company earnings are closely monitored by investors, analysts, and the media as part of the ongoing process of evaluating and investing in publicly traded companies. Companies typically report on a variety of financial and operational metrics during an earnings call. The specific metrics discussed may vary based on the industry, company size, and other factors. However, some of the most popular and widely reported metrics include number 1, revenue. This refers to the total amount of money the company made in a certain period of time, most commonly a quarter. It is basically the company's gross income. Total revenue generated by the company during the reporting period is a fundamental metric. It indicates the top line of the income statement and reflects the company's ability to generate sales. In some companies, this is broken down into revenue for different products, which helps paint a clearer picture of what brings in the most money. Companies like Apple will report on revenue made from iPhone, iPad, Mac, and other product sales, as well as revenue from services the company offers. 2. Net income, also known as profit or earnings. It represents the amount of money a company has earned after deducting all expenses, taxes, and other costs from its revenue. These two metrics, revenue and profit, often get mixed up. The simplest way to differentiate the two is by knowing that revenue is the gross income and profit is net income. 3. Earnings per share, or EPS. This is calculated by dividing the net income by the total number of outstanding shares. It provides a measure of a company's profitability on a per-share basis. This is a very popular metric as it is often used in headlines to attract people's attention because they are typically interested in knowing how much one share of a company is worth or how much it can earn. Don't be fooled though. It's an important metric, but it does not tell you the full story. which is why we have matrix like 4, gross margin. This is a percentage of difference between revenue and the cost of goods sold. It indicates how efficiently a company produces and sells its products. The higher the margin is, the more efficient the company is, which translates to a safer way of doing business. 5. Operating income and operating margin. Operating income is a profit generated from a company's core business operations before interest and taxes, while operating margin is calculated by dividing operational income by revenue and represents the profitability of the core business. These two complementary metrics are big determining factors as to whether a company sinks or swims, so they are very important for you to understand. 6. Cash flow. Companies may report on operating cash flow, investing cash flow, and financing cash flow. Operating cash flow, which is the most popular, reflects the cash generated from the company's normal business operations. And as the saying goes, cash flow is king. Without it, no company can stand. 7. Free cash flow. This is the cash generated by the business operations that is available for distributions to investors, debt reduction, or reinvestment into the business. You could compare it to a company's extra cash for discretionary spending, if you will. 8. Bookings and backlog. Companies in industries like technology or manufacturing may report on bookings or backlog, indicating the value of orders or contracts yet to be fulfilled. These normally have a value attached to them and are therefore accounted for when looking at company finances. 9. Return on equity. This measures the company's profitability relative to the shareholders' equity. It's calculated by dividing the net income by shareholders' equity. 10. Dividends. Companies may report on dividends declared or changes in dividend policies. Dividends are payments made to shareholders usually as a share of profits. Companies that pay dividends usually have more profit than they have need for, so they decide to reward their investors by giving back to them in the form of dividends. 11. Guidance. Forward-looking guidance provides investors with the company's expectations for future financial performance. This may include revenue projections, earnings estimates, or other relevant forecasts. 12. Key performance indicators. Companies often discuss various operational KPIs that are critical to their industry. These may include metrics such as customer acquisition costs, customer retention rates, or other industry-specific indicators. 13. Costs and expenses breakdown. Companies may break down operating expenses including research and development costs, marketing expenses, and general administrative expenses to provide insight into cost management. And 14. Debt levels. Information on the company's debt levels, including total debt, interest expenses, and debt repayment plans, can be important for assessing financial stability. This is another very important metric as it can give you a great idea of which way the company is trending. These metrics collectively provide a comprehensive view of a company's financial health, operational efficiency, and future prospects. Investors and analysts use this information to make informed decisions about their investments. Keep in mind that the specific metrics discussed can vary across industries, and investors can have different priorities depending on their investment goals and strategies. Now that you know what these metrics mean, the next thing to know is where to find them, and that is very easy. You'll need to have a Google account, which I assume you already do, given that you're most likely watching this on YouTube, which is a platform owned by Google. Second, go to Google search and type in the name of your favorite company followed by the words share price. For example, Apple share price. And this chart with the share price will appear. And just above it on the right will be this follow button, which you can click on to subscribe to any news related to the Apple company. Speaking of which, right now would be a very good time to hit that subscribe button just under the video. Just do that for me. I'd highly appreciate it. So once you're following a company, you'll get notified whenever earnings calls are around the corner and again after the call with a summary of the main matrix. That's not all though. You can even share information with friends, compare one company to another, and a bunch of other things to keep you up to date with your favorite company's financials. All of these features come at no cost to you, absolutely free. That is the power of Google Finance, the free service I promised to tell you about earlier on. Once you have all this information, you can always come here to YouTube and watch or listen to the call, or you can find a summary of it for a quicker way to digest the information. The whole idea with doing all of this is for you to know how a company is doing and whether or not it would be a good investment. You can look at how a company has been performing and compare that performance with previous performances. That being said, it is important to note that past performances are not an indicator of future success, but simply a yardstick to measure against. By paying attention to earnings calls, you can not only get to see the numbers, but also get to hear the stories behind those numbers and what the focus of the company is. Another big thing that you can come to learn is how the management of the company is doing. They have a lot to do with how well a company does. One of the biggest things that you can know from an earnings call is a company's debt to income ratio. Earnings calls can be very beneficial to us. They are obviously not a perfect way to measure performance because at the end of the day, not everything that is measured counts, not everything that counts is measured. But at the end of the day, we can get a lot of information from this kind of report. What do you think of earnings calls? Are you interested in the kind of information they provide? Do let me know in the comments below. There are a number of strategies that one can use in order to make great investments. What's yours? If you found value in this video, then click on that like button and share it with a friend. Subscribe to the channel if you haven't already done so, and click on that notification bell so you never miss out on personal finance and investment lessons. One of the most popular strategies that some people use is tracking what some of the best investors are buying. Watch this video to learn more about it. Thanks for watching. Hope to see you on the next one. But until then, stay invested.